All right, yield nerds. We are now on to episode 102, and I thought I'd talk to you about my thoughts on Q1 2024. And I kind of thought Q1 2024 is going to be much like this young gentleman here who is walking along a pathway with shards of glass, and there are some nice soft spots, but hey, be careful where you step. That is my message. Well, we're on to 245 subscribers. Thank you so much. If you're joining for the first time, please use the playlist called The Roadmap. And hey, I do not have any magical powers of prediction. I read about the subject of finance and macroeconomics and stock trading and bond trading. I share my thoughts. Please make sure you check what you see here. Look at this dude. He's telling you you're going to land a 7 on the face of a die. Do your own double checking. Don't believe me. Well, what does 2024 bring to us? And I went to our favorite Dolly Bing image creator and said, show me an image of some people in blue and some people in red cooking a vat from which money comes out of thin air. I thought it did a pretty good job. 2024 is an election year, and the red people and the blue people, one of them is going to say, hey, I'm going to tell you that we have results, we have a soft landing, this works. And the other one says, no, 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 our recipe for success is the right recipe. You are wrong. In the meanwhile, we are headed towards a partial government shutdown in just about 2.5 weeks. There is a fiscal crisis. However, neither party has a huge majority, which means to make progress, they will need to work together. So, what an interesting time to be here. Speaking of interesting times, apparently we have magic. Magic has happened. The most anticipated recession never came. We have a soft landing. That is what I'm told. And that soft landing means we have economic growth. Look at that. Awesome. We do not have consumer spending slowdowns. And that is because there is excess savings. That's what I understand. Excess savings. Go to a nice restaurant where a meal now is 30, 40 bucks and see how crowded it is. And just think through, are the grandparents paying? Is that why it is so crowded? Or are people just able to take money out of their savings account? Apparently, savings accounts are very, very full. So people aren't running out. They won't run out for another 12 months, is what I'm told. Interesting to me. Uh, the next point that the soft landing is making is that even though the spot rates for mortgage are through the roof, 8%, something like that, the effective mortgage rate is barely 4%, and so nothing to worry about, people. Home sales will continue on, and as you can see, unemployment remains at a historic low. New farm payroll has slowed down. All of these put together means that there is indeed a soft landing. You are wrong if you doubt it. So, hey, soft landing is here. The market says OMG, and the market is up a crazy amount, 15, 16% in some sectors. And that is what the market is saying, soft landing. We love it. Uh, to kind of continue that narrative, we have another thing happening. The Office of Management and Budget, the OMB, says, hey, even if there is a partial shutdown, in January 19th, even if there is a complete shutdown across all departments on February 2nd, don't worry about it. You do not have to go to the 1% sequestration. You can continue spending the current amount until April 30th. And that is a directive that came the day after Christmas. And what that tells me is that shutdown, no shutdown isn't really going to change anything until April 30th. Now you have to think through the incentive for both parties to collaborate. Looks to me that there is no incentive. Only because no matter what they do, there is still money or there is still the directive to keep going until April 30th. So why settle for anything on January 19th or February 2nd when you can settle on April 30th? So my sense tells me there indeed will be a shutdown, and there is going to be a disconnect of reality, meaning red and blue people will just say, I am going to stop agreeing, I am going to stop cooperating. However, because there is no impact on spending, because there is no impact on the government functioning, even though there is a quote shutdown given the OMB directive, the market will remain punch drunk for pretty much all of Q1 2024. So, what do we think this all means? Here is my read. My read is represented by this image from Bing Image Creator, which I continue to be very amused by. I said toothless tiger, that this tiger has teeth, so pardon that one blemish. Sorry, Dolly. My impression is that just the way kids are playing with this Bengal tiger in front of the stock market, and the tiger is pretending to eat cheese and crackers. Investors in the equity markets will somehow not see the threat of the fiscal crisis for Q1 2024. It will pass as though these two dates, upcoming dates, don't mean anything. There may be a couple of tremors here and there, but it is not going to create the market crash, is my read. And that probably means there is no incentive for the parties to come together, and there will be a partial shutdown. And the FOMC is certainly not going to drop rates on January 31st in their next meeting. And that means the Bengal tiger will look very, very tame. The markets may look very stable in Q1. There certainly isn't going to be a big rocking of the boat until April 30th. My slowpoke portfolio continues to crawl up in a very small and steady way, approximately 4% every 6 months. And the bumps here are mainly because of a couple of data errors. There are some dividend related things that I do. I manage my estimated taxes from here, but it sustains my cost of living and leaves about 7% a year in the portfolio, which I'm very happy with. And as I indicated earlier, most of it is state tax free. I do have equities and I'm building up my equities, and I thought I would share a little more about what kind of equities I'm building up. To be clear, this is not investment advice, it is education. And you see how this lady here is tapping snake oil. I might be one of them too, so do not believe me. Do your own checks and balances. All right, here's how my portfolio looks. And I've alluded earlier that I have a bunch of my portfolio maturing right around January 19th or February 2nd. And I have slowly been moving it along. So now I have a whole bunch maturing. When I say whole bunch, 60% maturing right around April 30th. The stuff that matures in or around end of January, February, I'm probably going to buy 2 months and again sit and wait for the end of April, because I just do not see cooperation on the cards. And by the time the election rolls around, I would pretty much have 80% of my portfolio rolling over and over again and anticipating a crash. So how do I look for suitable candidates in the meanwhile? Because I am building my equity portfolio in very small bites. I run 4 screeners. I call them the rising star. These are those that are coming up after hitting a 52-week low. The return on investment champions and return on investment, ROIC as it is called, return on invested capital, is a very important metric. And I'd love for those of you who like the quote magnificent seven and the tech industry to go check what the return on invested capital is for those stocks. Let me know how it goes. The Magnificent Seven, the yield nerd, Magnificent Seven rather, and value and dividends. So before I go into my screeners, I just wanted to step back and give you the way I think about PE ratios. Here is a company, it makes widgets, it's in the widget making operation, and it generates profits. If you're investing in companies that don't generate profits, hey, rethink. And those profits can be used to do a variety of things. Maybe the company has some level of debt, hopefully a healthy amount of debt, and the profits could be used to pay off some of that debt. Maybe the company says we want to buy back our shares because we want a fewer number of owners to benefit from this in the future. And the company may generously give dividends. Hey, I'll take some of your dividends. Or the company may say, I'm just going to accumulate cash, more and more cash, which we talked about enterprise value. And last but not the least, the quote growth engine companies may say, we're not even going to keep the profits with us. We're going to keep plunging it back into the business so we can have a bigger operation. That is the simple earnings cycle. Then you have to ask the question, all right, if I had $1 in earnings per share and the share cost $1, This seems pretty easy to me. It's a pretty obvious investment. I buy one share for $1 and the company generates $1 per share in earnings. In theory, if I had control over that company, I would say don't do any of this. Don't accumulate cash, don't service your debt, don't buy back your shares, don't do reinvestment. Just give me that entire dollar in dividends. Thank you. The end. I got my money back. You see how this works. If you bought a company at a share price of 1 and the earnings per share is 1, you'll get your money back in a year. Step back and think about what it means to have a P ratio of 35. 35 means you would have to let the company do nothing other than paying you back everything it earned for the next 35 years to get your money back. Now look at all the Magnificent Seven with 50 and 60. What are you thinking? So let me tell you what the Yield Nerd Magnificent Seven is. The Yield Nerd Magnificent Seven are those with very healthy volume, so there isn't a lot of spread, very high profit margins, low debt, because you don't want money to go towards debt service, huge cash flows, so you can then decide what you want to do with the money. And oh, by the way, a P ratio less than 20, even 20 is generous. And you look at who these stars are, and you can look at the P ratios 3s and 4s and 5s. I do not own Interactive Brokers, but I do own every single other equity in this. These are what I call my Magnificent Seven, which meet all of these criteria. I run the screener. If there is something new that comes up, I investigate it. I have my own reasons to not buy Interactive Brokers. They have a lot of crypto trading going on, and I'm not a crypto person. But hey, if that is something that is your cup of tea, knock yourself out. What about Rising Stars? In Rising Stars, which is another thing I run fairly frequently, what I'm looking for is companies that hit the 52-week low and are coming up. And outside of hitting the 52-week low and coming up, everything else is the same as the Magnificent Seven, except one more thing. I look for huge return on invested capital. Now, what is return on invested capital? When that company takes that price to earnings ratios, generated cash, and they deploy it, how much in earnings are they able to kick up? Meaning, what is the return on $1 of invested capital? And if they can generate a big return, I want it. And the winner in this scenario for me, and you do you, is Chord Energy. And so that is one that meets this criteria, and I'm invested in that, conflict of interest. The return on invested capital champions is another screener. Here is the Magnificent Seven with return on investment in the highest tier. And there is a new one here. I'm declaring a conflict of interest. TK Tankers, TNK is their name. They have a really healthy return on invested capital, don't have debt, or no, don't have a lot of debt, very high profits, very good cash flow. So I am accumulating TNK or TK Tankers very slowly at first. I don't like to make very big buys, but that meets that criteria. In the value and dividends, I balance dividend yield with price to earnings, debt, and cash flow. So this is the Magnificent Seven, but they got to give me dividends. And to be clear, I'm accumulating PXD, Pioneer Natural Resources, very small bites again. And so these are all Cal-Maine Foods, is one of my favorites. So having said all of this, here is how my trades have fared since the last episode a couple of weeks ago. Aside from all these treasuries, that mature and the agency bonds that mature, I told you earlier, I'm buying Pioneer, PXD. Chesapeake Energy is in the Magnificent Seven. And I have a whole bunch of treasuries again maturing that I'm rolling again and again, waiting for some kind of a market crash that I think now will happen April 30th. And if I continue on, we then come back, there are more agency bonds that mature. TK Tankers, I mentioned earlier, Arch Energy, also in the Yield Nerd 7. So that is how my portfolio looks, a whole lot of fixed income with some sprinkles of equities here and there that meet certain criteria. Here is the top of my leaderboard when it comes to equity returns. One OK, which is no longer a good buy based on my own criteria, but hey, I'm up 120% on it, so hey, that worked out. AbbVie, Encore Wire is still a phenomenal buy. I'm up 45% on it. Do your own math on that. Intel is the only tech stock I have, and I'm up about 18% on it. Calmain Foods, of course. So you can see that a whole lot of my leaderboard is comprised of energy stocks, but I've made many blunders. Here are my equity blunders that I bought 2, 3 years ago. Terrible, awful, Zing shipping 85% down. Holy moly. But here is what I would point. Once I started putting the filter, once I controlled my own impulses and said, I am not going to buy anything unless it matches the filter, my gains have buried my losses. And in my entire equity portfolio, which is around 12% of my total portfolio, I'm down 2%. And I think I'll be turning the corner, hopefully by April 30th or so. So that's my equity portfolio. It still produces a very healthy amount of dividends, good amount of growth, but I haven't recovered from my blunders a couple of years ago. And so I'm hoping to turn the corner. We'll see where it goes. So here is my 3 month strategy. I am still going to sit on T-bills until April 30th. I will take small bites of companies that meet the criteria that I laid out. Aside from that, I expect a crash on or around April 30th, and I'm going to position that way. So T-bill and chill until April 30th with some equity buys is what I am doing. Happy New Year. Hope we all get to have a good fixed income year. Thank you.